Good afternoon. We are preparing for a hurricane here in Hawaii, and I just want you to be comfortable and understand that our company will continue to operate. Phones will be answered in Utah. All trades can be activated, and we'll be watching the markets and acting the way we normally do, in spite of what may happen to us over the next 24 hours. So the hurricane is not going to disrupt us at all. This message is about another kind of a hurricane. It's about another kind of a risk that seems to be growing, and that's the stock market risk and the bond market risk. We think we've entered an enhanced risk area, and it's brought on by Janet Yellen, the Federal Reserve Board, and her attempts to get off of printing money, the QE business, and to get back to normal operations at the Fed. And in so doing, she risks a tighter environment. She risks a marginal borrower like Argentina, who may be unable to pay off their debt. And because of this, there's a contagion risk, as we call it. We're looking at Puerto Rico. Portugal dodged a bullet because their country stepped up and took the biggest bank debt over rather than letting the bank default. But we still think the chance of an accident like that is fairly high in here. Puerto Rico is of immediate concern. Puerto Rican bonds are in virtually every bank in every state in this country, and they're having a hard time down there. So with this enhanced risk, last week we cut our equity exposure by about 25% in most portfolios, but we still have a solid commitment to the stocks. The markets themselves are at risk tolerances. They're at the edge of their technical levels, and should they break from here, we won't hesitate to cut back even further. We just want you to know that we think the risk is financial risk again. That good old-fashioned boogeyman has come out of the closet again. Additionally, we've got 3 months before an election, and at this point the polls tell us that the Democrats probably have lost the Senate. Now, it's too early to count your chickens, but at least that's what the polls are saying. And when that's happening, politicians can get pretty desperate and start grasping at straws and using their imagination to create little crises. So the political risk factor from both sides has increased. This increase in risk in the markets per se have just led us to say we want to cut back proportionately on this risk and keep your risk in your investment portfolio steady. So that's our message. Hopefully the markets will hold here and we get a nice little bounce. We can't tell yet, but we do know the risk has gone up and our exposure has gone down. Thank you.